Hi guys, welcome back to this week's Technical Insights. On Friday, 21st April, Singapore local shares were not much affected by the downturn that impacted the other markets in the region. This was due to a resilient afternoon session that was able to recover from the losses incurred during the morning trade. The afternoon rally actually helped the Straits Times Index ended 8.4 points or quarter of a % higher at 3,321 points. However, losers still outnumbered gainers 289 to 255 on volume of 1.28 billion shares, worth about 1 billion dollars. Asian markets were in a sea of red after a sell-off overnight in the US markets, where all three key US indices ended in the red. Investors were worried that the Federal Reserve could further raise interest rates amid a slowing economy with accompanying recession risks, as well as the lackluster earnings from Tesla and several US regional banks in the earnings season so far. The Shanghai Composite Index was down 1.95%. The Nikkei in Tokyo slumped 0.33%. Hong Kong Hang Seng Index also tumbled 1.57%, while the Kospi in Seoul fell 0.73%. Singapore Airlines posted a 0.5% gain to close at $5.86. The group flew 2.7 million passengers in March, up 14% month-on-month at a group load factor of 89%, or 2.4 percentage points higher than in the previous month of February. Another constituent stock, Genting Singapore, also closed 1.8% higher at $1.16, a day after Singapore achieved post-pandemic record high tourist arrival of 1 million in March. So let's take a look at the technical setup of the STI as well as both of these companies. For the STI in the past 1 week, it is up 0.49%. For the past 1 month since the bottom that we saw in March, it is up 4.01%. Year to date since January, it is up 2.40%. Key levels to watch for the STI index is the year-to-date high in January at the 3,408 points level, and key support level to watch for the STI is the 3,094 points level, close to the 3,100 handle, which is the March low. Now, the level of 3,300, which is a key level, is still a pivot level for the STI index right now. For the past 2 weeks, we have been unable to break above this key resistance level of 3,300 as well, because this is the level of the December high that we observed last year. And the trading range of the December high and December low would likely be where the STI will be trending in the next few weeks. Let's take a look at the indicators for the STI index. The MACD indicator reading is at 3.36. Now, this reading tells us that it's a positive reading, hence there might be still some positive momentum in the Straits Times Index points. However, as you can see, the MACD histogram for the past 2 weeks has been showing a subsiding kind of a momentum, kind of pattern forming, thereby it's telling us that this uptrend momentum has been subsiding in the past 2 weeks. The MACD line is also seen converging towards the signal line, thereby double confirming that this uptrend momentum is subsiding as well. And we are very close to seeing the MACD line cross below the signal line, meaning that if that happens, a bearish reversal might happen and pull the index down. The RSI index, since the low that we see in March, where it breached below the 30-point oversold level, has been on an uptrend. However, in the past 2 weeks, this uptrend on the RSI seems to be subsiding and plateauing and hence moving sideways since the beginning of April. This also shows that the uptrend momentum in the index is subsiding as well, although 61-point reading is still telling us that there might be still uptrend momentum in the index points. So with both the MACD and the RSI concurring that the upside momentum or the uptrend momentum is subsiding, we are likely going to see a reversal happen if the MACD line were to cross below the signal line. And hence the 3,300 is likely going to be a resistance level for now, going forward in the near term. Next, let's look at SIA. For the past 1 week, SIA is up 2.09%. For the past 1 month since the March low, it's up 3.17%. Year to date since January, it is up 6.16%. Key levels to watch for SIA, of course, will be the $6.02 level, which is the year-to-date high in January. The support for SIA share price will definitely be the year-to-date low in March at the $5.53 level. Now, this level or this range was not seen in the previous year as well. So you can see that the support level of the 5,053 cents level is actually a triple top formation during the April and May period of last year. A triple top formation is actually a very strong resistance level kind of formation or a strong bearish formation. However, that have a change in polarity to provide the support for the bounce that we saw in March this year. Just slightly below that, at the $5.44 level, is the previous high that we saw in April or in February last year. So that will provide further support for the SIA share price should the prices come down. Let's take a look at the indicators. The MACD indicator has a positive reading of 0.08, thereby telling us that there's positive momentum in SIA share price right now. We also observed the crossover of the MACD line above the signal line last week. So that means that a crossover is a change in the direction of the share price movement from a downtrend that we saw in early part of April to an uptrend that we saw last week. So this uptrend is likely to continue because of the crossover is seen diverging away from the signal line as well. So a divergence of the MACD line away from the signal lines means that this uptrend momentum might be gaining strength going forward. The RSI reading is at 59.86. Now, the lowest that we have seen in March, the reading was around the 36-point level, which has not reached the 30-point oversold mark. So this uptrend momentum at the end of March towards the earlier part of April is likely still intact. So with the RSI still gaining strength since the past 2 weeks, we can say that this uptrend momentum is likely to continue as reflected in the RSI. So with both the MACD and the RSI pointing to us that it is likely to gain momentum going forward, we can safely say that the SIA share price is likely to trend higher in the near term and retest year-to-date high at the $6 or $6.02 level. So with that, we will move to the final counter for this week. That is Genting Singapore. For Genting Singapore, in the past 1 week, it is down 0.85%. For the past 1 month since the low in March, it is up 8.41%. And year-to-date, it is up an impressive 21.47% since January. The key level to watch for Genting Singapore, of course, is the year-to-date high that we saw in April, which is $1.19. Key support level will be the March low, which is at the $1 handle. Now, the price range that Genting Singapore has been trading in this year is much higher than last year. Hence, there's not much of a reference we can take from the last year trading range. However, if you look at the indicators, the MACD indicators now have a negative reading of 0.005. We also saw the MACD line cross below the signal line last week, which means that this is a reversal signal, and hence we may observe a bearish reversal happening in Genting Singapore share price right now. Now, the RSI reading at 63.57 shows a very healthy momentum. However, this reading comes from the high that we observed in early part of April, where the RSI touched a level of 78 points, which is a overbought territory. And hence, the RSI has been moving downwards from that 78 high to the recent reading that we have in at 63.57. So this trend of the RSI is likely to continue and the momentum is likely going to drop, with the MACD line crossing below the signal line, telling us that this is a reversal that's likely going to happen or it's already happening right now. We see that Genting share price may have already peaked for the near term this year in April at the level of $1.19. Hence, the risk to reward ratio for a long position is unlikely favorable. However, I also would not advise to go against the solid uptrend that we see since the low in October last year. So not going against this trend, it would be wiser if we can take a long position towards the support or the uptrend support line that you see over here, this price channel, which is around the lower bound of the Bollinger Band at $1.08. Thereby waiting for a pullback in Genting share price again before we go long to ride on the solid uptrend that we see for the past 6 months. So with that, I've come to the end of this week's Technical Insights. Thanks for watching, and I hope you find it useful. In the meantime, trade safe, and we'll see you in the next video.